Alright, good morning everybody. Hope you had a happy holidays. This is episode 1 of ICT Backtesting with a Purpose, where we're going to be backtesting ICT's 2022 Mentorship Fair Value Gap model on NASDAQ. And this applies to pretty much any pair, but we're going to have a focus on indexes. ICT likes to trade index futures. You can also use that in its place, but I prefer the regular indexes for my charting. And I'm just going to show you exactly how I take my trades live. So there's really not much difference. The routine is the same. The daily routine before you hit the charts is the same. The way that you analyze price is the same. So backtesting with a purpose means you're backtesting for building a playbook. And a playbook is just a collection of your, screenshots essentially, and data that's contained in an Excel spreadsheet, and it really just tracks the performance and the quality of the setups for the strategy. In this case, the strategy is the fair value gap model that he showed. So that's what we're doing here. If you can see on the screen, I'll pull this up for you. I've got a Excel spreadsheet template. We'll go through that a little bit later once I get some markings up on the chart. And this really just, again, tracks the quality of each of these trades. And what we're doing here with this is we're building a playbook. And the playbook, you're going to take the top 2 or 3 performing trades setups, and those will be your, really that will be your bread and butter. That's what you're going to ingrain in your mind, visualize, review constantly, so that you can improve your ability to recognize the pattern. So pattern recognition is the key. You want to get to a point in your trading where you're able to recognize these things playing out in real time. And backtesting can only take you so far. You're really going to have to spend time on the charts in a live environment and get a feel for the way price moves and the way that the candles develop. And by doing that, you'll really improve your trading. But for right now, what we're doing here is, as you can see, we've started the stream before and the quality wasn't too good, so I've had to start the entire series over. So this is what this data is from our previous back tests. I'm just going to leave it in place and we'll just go through it step by step. So let me pull this down again and we'll get started on the chart. Okay, so the first steps that I take here, as you can probably see, let me make this a little bit bigger for you, is I look at the, so we're going to start with, ideally you want to backtest 30 whole days in a row of price action, but that makes it, the economic calendar makes that kind of difficult. For example, December 1st is like midweek, right? And then I think it's a Thursday or something like that. And then you have the first Friday of the month rather, you've got NFP, right? We don't want to be trading NFP. So keeping an eye on the economic calendar is super important. So we're just going to start with the first Monday of a week after NFP, and that is Monday, December 5th. So that's going to be our first day that we backtest, since we're basically just skipping the week that had NFP in it. And this will give us some good clean data that we can use to build our playbook with. So as you can see, at 8 o'clock Central, 9 o'clock Eastern, there's ISM Services PMI, so that's red folder news. And that happens right before equity open, so we could see some pre-equity open entries. I'm going to do my best to focus on showing you post-equity entries only. For some of the advanced people, charter members, people that have been around ICT for a while, you may want to engage and take the pre-equity opens, and we may do 1 or 2 of those. But for the most part, we're going to keep it to post-equity, looking for post-equity entries. So that's what we're going to do now. Let me pull this off, get us back to our chart. So here's the step-by-step. We start on the 15-minute chart, and we've marked out, essentially what we've marked out is the London session, the start of London session, or or really the true day beginning, which is midnight open. And we've also marked out with this vertical line equity open. Actually, it looks like that's at 8 o'clock, so there we go. 8:30 my time, which is Central Time, and that's of course 9:30 Eastern Time. So 12 o'clock midnight Eastern and 9:30 Eastern, those are the two important time frame levels. And then of course you mark out with a trend line the midnight open. So that's what you have on your chart here. Let's go ahead and hit the replay button and let London play out, and we'll take our next steps from there. Okay, as you can see, prices moved a little bit early. That's probably due to the news that we looked at. Also, you can see here we had buy side that was taken overnight. These nearly equal highs taken. Then we had a break in market structure right here, or a shift in market structure. For the purposes of backtesting and my live trading, I just call it a BMS, break in market structure. It's easier to denote on the chart. But for clarification, ICT makes the distinction that the market structure shift is a lower time frame break that we're looking for entries, and the market structure break or break in market structure is really just a change in market structure on the higher time frames, like the 4-hour or the daily or higher. But we're going to use them interchangeably. So as you can see here, we have a fair value gap pre-equity. Right there, mark that out. And what I have is presets. So I've got all the different arrays, the price action arrays that could be appearing on the chart. I've got those preset already in my drop-down list here. And if you'll notice, it comes pretty close to the consequent encroachment, or the 50% line of this fair value gap. Doesn't quite get there, but gets pretty close. What it does do, however, is it comes up into this is a swing high, a swing low, a higher swing high. So this little V-shaped price action here is a breaker. So we can also mark that out. On the 15-minute, we've got a breaker. We want to use the lowest bodied candle, which would be this fella right here. And if you notice, look at that precision. Look at how it just instantly taps to the pip or to the point, and then it shits the bed from there. So this would be your pre-equity entry right here. Typically, you take it on a lower time frame than the 15-minute, but considering how clear this is, and it gave you multiple chances to enter. And also the New York open candle, 7:30 or 8:30 Eastern Time, so 7:30 my time. This is that candle right there. That's the one that makes the breaker tap. So if I had seen this pre-equity, I absolutely would have felt confident taking this with the stop loss right above the breaker. Right around there, which is about 11 pip stop loss. We could even go 15. On average, if the price action allows for it, my stop loss is typically going to be around 25 points. And then, of course, you'd be targeting the swing low down here, which actually gives you about 80 points in profit. And you're looking at like a 5-to-1 RR. But for the focus of this series, for anybody who might be new or just learning this, let's just focus on our post-equity open entries. So now, once we see that liquidity has been taken overnight or after equity open, depending, we're automatically going to drop down to a 5-minute chart. And price could absolutely run away from us here, and we just have to look for a continuation fair value gap, but that's okay, no problem. So actually, let me go back up to the 15-minute, and let's mark out our obvious 15-minute buy side and sell side liquidity, which would be this right here. BSL stands for buy side liquidity. And this is our obvious sell side liquidity. So right now, for post equity entries, we've already got the first 3 steps played out. And let me just mark this out real quick and I'll show you. Again, BMS stands for break-in market structure. And I might need to get a new keyboard. I've got a new computer here. It came with a keyboard that's pretty clicky. So some of you ASMR folks might like that, but for me it's pretty annoying. So I'll get that fixed. Okay. And let's also make this step 1. Step 3, and I'll tell you why in a second. The second step, so you got clear 15-minute liquidity taken on the buy side or the sell side. In this case, it happened overnight on the buy side. Then you have a displacement, a strong, clear displacement, usually over 60 points. It's what we'd like to see, and that's happened here, so that's step 2. I could mark that out, but it would make our charts a little busy. And let me send this to the back here. There we go. And so step 1, buy side taken on the 15-minute, clear liquidity taken. Step 2, displacement all the way down to the opposite side of the market. Step 3, a break in market structure, which has occurred. Right, so we're definitely going to drop down to the 5-minute here. And I'll also pull up the 1-minute chart. I'm gonna have to scroll all the way back. I guess I should have, yeah, let's do this. I'm gonna redo the replay. And we'll just jump to Monday the 5th. There we go. I'm not sure why it's not doing that for me on the 1-minute chart over here, so maybe we'll just close this out so we don't cheat. So typically what you'll see at equity open, you're going to see some more buy side ran out, and then you can see like a continuation. Sometimes it just goes straight down, and that's always a possibility, but let's play this out and see how it goes. So we start on the 5-minute, we're looking for anything clear on the 5-minute, and we'll replay that now. Let's get right up to equity open. Bam, right there. Okay, so now what we're going to do is we're going to make this bigger, and we're going to take our before screenshot. So you're going to take screenshots before, during, and after your setup. So before equity open, preferably, we're going to take a screenshot here. Save chart image. That will download that for us. Now let's go ahead and take a look at the Excel spreadsheet that I've made here. And fill in the things that we know already. So the entry timing, is it pre-equity, post-equity, or the PM afternoon session? Well, it's post-equity so far, all right, because we missed our entry, or we're not taking the pre-equity entry if we're new. Was the liquidity grab, was that internal or external? Meaning, did it go for a price action array within the range and then break the market structure from there? Or did it actually go above or below a high or low? Well, as you can see, it's external liquidity taken because it took London sessions high, right? So that's external. What was the quality of the displacement? Was it under 60 pips or excuse me, under 60 points or over 60 points? Well, in this case, it was over 60 points, so we're recording that. And now the stop loss level, we're gonna wait to see our trade setup. So let me go ahead and get this out of the way real quick. Here we go. Let's press play and watch this play out on the 5-minute. Bam. All right, so there's an entry back up. So we got a return to the fair value gap on the 15-minute. We've taken the buy side above a key swing high, which is this New York Open right here. And we hit consequent encroachment of the 15-minute fair value gap. And we're tapping back up into the breaker again. So this is a valid entry. We would absolutely be doing a great job to enter there. So let's take a short. Let's call it right from the breaker bottom, right there. And as you can see, here's the candle. ICT recommends the candle that creates the fair value gap. You want to put your stop loss above the premium of that. This right here. So this would give us a 20-point stop loss. If you wanted to be safe about it, and let's just, for the purposes of this backtesting, let's just make it 25 points. That puts us back above midnight open. And then for targeting, we'd be looking to target something like these, probably these equal lows here. These stand out on the chart pretty clearly. And if it's going to go for this, 11,871, 11,853. These are only 20-something points apart, and this is a very clear liquidity pool down here, which these basically exactly equal lows. So that's our obvious target, right? That's about 98 points. Let's make it an even 100. There we go. All right, and so now what we want to do is take a during screenshot. So we took a before our setup appeared. Now during our setup appearing, we want to take a screenshot. And you're going to insert these screenshots into a folder, or you can put them as links inside this Excel spreadsheet that I've made. And that basically is your playbook, right? The data about the trade is cool, but the visual chart screenshots that you're taking, that forms the meat and potatoes of your playbook. Before, during, and after screenshots. And you're basically training your mind to see, all right, what did this look like before my setup came? What did it look like during the setup? And then what happened afterwards? And then everything else is just recording the quality of the trade. How much drawdown was there? How fast did it run to the target? You know, what is the safe area to put my stop loss? What was that? And over time, you'll build up the pattern recognition skills to actually see this play out in real time. And that just gives you extra confidence to follow your plan and your system. So we'll take a save chart image here. Now we also know a few things. Right now we know that our stop loss is safe at 25 pips, or excuse me, points. All right, so 25 points is good. We're gonna let this play out and run towards our take profit before we determine how much drawdown there was, because, you know, as if you've been on the charts for any amount of time, as you know, sometimes price can gyrate around and put you in more drawdown before it actually makes its move. But so far, the price action is clean, so we can leave this as clean. The stop loss level is less than 25 points, or 25 points or less. The displacement was 60 points or more. The liquidity grab on the 15-minute was external, and our entry timing was post-equity. So we know all of these things so far, and now we can just let the trade play out a little bit, and I'll speed it up for you. And we can see it immediately runs for our target, which is absolutely beautiful. We love seeing that. Okay, so now we've got a couple more things that we can record. First of all, it's going to be try to get the lows over here in the frame if you can of the screenshot. You notice that we poked below that nearly equal low liquidity pool. We dipped into it and then immediately ran back up. This, of course, too, is a breaker. This price swing here. The apex, the lowest body candle, the apex is a breaker, and it's sitting right at a continuation fair value gap, so the chances that that will get tapped are super high. You could take an extra entry there if you felt like it. If you know, if 100 points wasn't enough for you. But let's take our after screenshot, which I've just done. And now we can go back to, oh, sorry about that. Let me move this out of the way. I gotta be more diligent about that. All right, so you see the equal lows over here poked it below. Here's the breaker. So equal lows. The breaker here is these two consecutive candles with the lowest body candle down here. And you've got a fair value gap right here that it's about to come back up into. But as you can see, we've run immediately to our target, and there was no more drawdown than what we originally saw. So that's 11,951, 11,954, let's call it 55. So less than 5 points of drawdown, which is absolutely beautiful accuracy. So we'll move this to right there so you can see. All right, so less than 5 points drawdown. Let's select that. Price action was clean. Trade duration was, let's see here. From the time we entered, we had 5, 10, 15, 20, 25. So 25 minutes of entry. So that's, was it over or under 15 minutes? Well, the trade duration was over 15 minutes, so that's good. We'll leave that there. Now we get into some other things about the quality of the trade. And let me go ahead and make this bigger so you can see. So at the entry point, was there, how many fair value gaps were there at the entry point? Well, we are entering on a 15-minute fair value gap retest. So there's only one of consequence, right? And if you go down to the 5 and the 1 minute, there are some fair value gaps near the top end of this breaker. But the chances that, you know, we would want to wait to see those hit are, you know, we wouldn't want to do that essentially, because the breaker array is here in the center of this higher time frame fair value gap. So our focus really would have been the consequent encroachment area, and of course it's taken buy side again. So that's just a beautiful confirmation that we're in the right spot. So we'll call this, we'll just recognize the 15-minute fair value gap as being just 1 in our entry zone. And then let me move this over a little bit more. Okay, so proximity arrays. Are there any price action arrays in the proximity of our, or in the area of our entry zone? And what time frame are they on? Well, yes, there are. Remember, this blue shaded area is the 15-minute breaker. That's right smack dab in the middle of the 15-minute fair value gap, which is what we were targeting because we had already seen it play out pre-equity. Now, all of those things gave us confidence to re-enter when it retested. So the only thing of consequence really is this 15-minute breaker, but we're just going to denote the time frame. And then if you notice here, let me scroll this over for you. We've got our before, during, and after section, this red section here. And I've literally just taken the screenshots that I've downloaded and I've made a link to them on my computer. and posted the link so that we're not blowing up our screenshot really big with huge pictures. It just becomes unwieldy. And then if you look here, the setup grade can be selected anywhere from A+ to B. So A+, A, B+, or B. I like to keep it to those 4 grades. Those are the ones I'm looking for. Here's the thing that pros do that most people miss. They're grading their setups. Yeah, that's true. But depending on the grade, the anticipated grade as the trade is playing out, when they go to execute, they're going to put on a position size consistent with the expected grade. So obviously you're not going to know everything about the trade setup as it's playing out, but you know enough, right? Is the price action clean? Yes. Was there a displacement of over 60 points, which is ideal? Yes. Can you put your stop loss in 25 points or less to be safe? Yes, we can in this case, right? All those things we knew as the trade was setting itself up before we had our entry trigger. So based on that, was there a proximity array? Yes, there was, right? All of those things. Did we see, multiple fair value gaps before the entry happened, or was there just one in the entry area? In this case, there was just one. So let me scroll down and show you what that means. I've got a little scoring or grading table to help me choose as the setups are forming. So these are the 5 most important qualities that I've deemed to be important about my trade setups using ICT's fair value gap model. Was the entry available post-equity? Yes, it was. Was there an external liquidity grab over an internal liquidity grab? Yes, there was. Was there 60 points, more than 60 points of displacement? Yes, in this case. Was there the ability to set a 25 point or less stop loss? Yes, we had that. Was there one fair value gap at entry? In this case, yes, there was. All right, so if 2 out of 5 of these quality parameters are true or yes, then we're going to give it a B grade. If 3 out of 5 are true, then we give it a B+, 4 out of 5 is an A, and 5 out of 5 is an A+ setup. For position sizing, for a B, you want to risk anywhere from like 0.5% to 1%. B+, you can get away with like, I'd say, 1 to 1.5%. An A setup, you'll want to be doing like 2 to 2.5%. And then an A+ setup, you can get kind of crazy with it and go 3% risk or sometimes even 4% risk. In this case, it's an A+, so we're going to risk 3% on a $100,000 account. That's typically what people get for an FTMO challenge. So we'll just call it starting equity is 100,000. So we're risking 3,000. We're taking 100 points in profit. So we do some quick math here. Let me pull up my calculator. Sorry for the clicking. I'll get that fixed. Okay, so here's how you calculate. You start with your risk amount in dollars. So 3% of a $100,000 account is 3,000. And then you're going to divide by the stop loss that you set, which is 25 points. So 3,000 divided by 25 points. That means we can have 120 contract size. So 120 times 100 points in take profit that we've done times 100. That's a $12,000 profit. So we'll make this 12,000. We'll fix this here. Yeah, so we risk 3 to make 12, which is like a 4 to 1, 5 to 1 trade. 4 to 1, I think. Yeah, and let's change this grade to A+, because it was a beautiful setup. And guys, that's how you build your playbook. And then what you're going to do is you're going to take your top 2 or 3 performing setups, your A plus or what have you, you're going to print those out. You're going to print out the data and you're going to print out the screenshots and keep that in a file or a folder somewhere that you can reference and open up before you take your live trades. And that's just going to refresh your memory, like this is what a good setup looks like. These are the parameters that I'm looking for, you know, and obviously you can grade it with a live Excel if you want to. But you'll get to the point in your trading once you've practiced this enough and you've built a solid playbook. You'll get to the point in your trading where you can just do this in real time without any help, just using the blank chart. So that was December 5th. Let's go ahead and move on in our time frame on our chart to December 6th, which is the next day. And move this back over here. Let me get this out of the way for you guys. And it's important not only live trading, but when you're back testing, you always want to be checking your economic calendar. Okay. Let's go to, click on the date. Let's go to December 6th. The only thing we have, actually we don't have anything. It should be a standard delivery day for Tuesday, December 6th. So that's great to see. All right, so we're back on the chart. Let's go ahead and reset everything here. Shift all this over and use it. 8:30. Midnight open. Get rid of these. Okay. All right, so now what we can do is go back up to our 15-minute chart and let price play out until we get to midnight open, and we'll mark out our midnight open price. Okay. Okay, all right, so what we've done here is we've got their 15-minute liquidity grab marked out. We've got our area where we expect market structure to be broken, the most important area, which is the 15-minute nearly equal lows down here. What we're going to do is take our screenshot, which I just did for our before screenshot, and we'll get right up to equity open and see if we have a trade post equity. If it runs away from us aggressively like we saw before, then what we'll do is look for a continuation entry. But the framework of the setup is already playing out here. So you've got this yesterday's liquidity taken, today's liquidity taken overnight, nearly equal lows, and then we scroll here. The fact that this low still hasn't been taken, but we got close to it, so it's building up liquidity down here, trend line liquidity for retail traders to think this is a trend line. So that's flout right there, finding liquidity on unexpected traders. If we were to use the Asian range and the CBDR and the flout zones to do projections, I'm almost positive that one of those levels or all of those levels would correlate somewhere down here or down here, which gives us a target. And we'll get into that later on subsequent streams. But for right now, let's play out. So we've taken our before screenshot. Let's go ahead and play out the price action. There's a break in market structure already. And actually, let me move this to 8:30. Break in market structure happened at exactly 8:30. And it's moved so far down that we're not, I mean, this is 766. This is like 100 points of movement already. So we're not looking for once that happened, we'd be on the 1 minute. So we're not looking for a return up here, but we're looking for any fair value gaps that we can do a continuation off of on the 1 minute chart. And once you start seeing it retrace with like a clear retracement candle, like right there, this fair value gap's not likely to be hit. This one's pretty clear. It's close enough to the 50% of the swing here. So we're okay taking that. So this is where we would enter. Let's call it consequent encroachment, and I'll have to measure that. We got pretty darn close to that already. 1718. It's pretty close. All right, stop loss above the premium here. The premium candle that forms the premium line, which is this guy, but we're going to go above this one. And what are we targeting? Well, the obvious liquidity over here has already been taken, so the next liquidity that we're looking for is this bad boy down here. Let's come back up to the 15 minute. So what we would target in this case, since this has been taken already, is, let me see if you can see this, premium line of the fair value gap, the opposing fair value gap on the 15 minute. So that would bring us to 131 points. Let's just call it 115. Go back down to the 1 minute. Right, so if you're at equity open on the 1 minute, there is an entry right here, but the break in market structure hasn't really occurred on the well, I guess it has on the 5 minute, yeah. So this was a valid entry up here. You could take this for this fair value gap, this small one. Most of the time it moves so rapidly you might not catch this And then here's another re-entry here, this fair value gap. But in this case, there's a clear one right here that is just super obvious that you'd probably be able to catch with this quick moving price action. So we're going to assume that we caught this one. I'm going to mark out our fair value gap here. And I'll use my presets to make that correct. There we go. Okay, so let's continue to play this out. Continuations are always kind of scary, a little bit sketchy sometimes. But if you had caught these two up here, I mean, those are just clearly obvious ones up near the original break of market structure. So that would have been nice. But in this case, as you can see, actually, I'm sorry, let me take a screenshot of our during profile. Save chart image, speed up, and replay to the profit. Bam. Okay. Now we can take a after screenshot, and we can go fill in the quality of this trade here. So it was a post equity. It was an external liquidity grab. Displacement was well over 100 points, so that's over 60 points. Let me pull this up here. There you go. Stop loss level, we were able to safely put it at 25 points or less, so that's great. The drawdown that occurred, so we entered on this first, pull this down. We entered on the first candle that went into this continuation gap. And we took 8 points of drawdown, which is still not bad at all. So drawdown over 5 points. Price action was very clean. And the trade duration, let's see, from here, 8:48 to 9:07. 15 minutes basically. So let's call that 15 minutes or less. We'll just call it 15 minutes or more because I think it's got an extra minute in there. There was 2 fair value gaps, actually 3, one here, and one here in our entry area, which brings the quality down a little bit, but it's not too bad. There weren't any clear 15-minute proximity arrays because we had already moved so far down past the overnight session. So in this case, we have 4 out of 5 of our qualities. Let me pull this up so you can see. One fair value gap entry. No, there was more than one, so we'll make that no. And that gives us a grade of A. So instead of an A+, we've got an A setup, which is still great. In which case we can risk, you know, anywhere from 2.5 to 3% or 2 to 3%. We're going to stay on the low end and call it 2. Again, assuming a $100,000 account for the purposes of this stream here. And let's see, how many points did we take? 115 points. Let's call that 115. So the way that we calculate the profit here is we had $2,000 at risk. Divided by our stop loss, which was 25. That lets us take an 80 contract position size. So the profit target was 115 points, so 80 times 115. 9,200. Not a bad day at all. Boom, there we go. Okay. And guys, that's it in a nutshell. I mean, that's what you're doing every single day for at least 15 days, if not 30 days in a row of a given month on a given pair. And you're building your playbook. You're going to take your top 3 to, let's call it 2 or 3, or sometimes if you have enough data, you can take your top 5 setups, and you're going to actually print those out off your computer and the screenshots as well. And you're just going to review that constantly. Like every time you sit down to get ready to trade on the chart, you want to be reviewing that. So that way it's ingrained in your mind, and you can see it play out in real time, and you have increased confidence. You won't be wondering what's happening when price is going against you, that type of thing. So yeah, that's backtesting with a purpose. A lot of people are just backtesting to see if the strategy works, what's the win rate, how many times does it work, how many times does it lose. That's all well and good. There's nothing wrong with that at all. But you're just essentially you're basically wasting your time if you're not keeping that data somewhere. If you got backtesting software, cool beans. But the manual version of this is creating a spreadsheet, manually entering these every single time, going day by day, backtesting them, recording all the results, and then pulling out or extracting the best performing setups and just repeatedly looking at those constantly. That's backtesting with a purpose, and it will serve you well. What you're really doing is practicing your live trading skills and pattern recognition. So with that, we'll end the stream for today. We'll do another 2 days tomorrow. And until then, I wish you best of luck, and be safe out there. I would not recommend trading live funds until maybe the midweek, second week of January, but you're free to do whatever you want. So thanks for joining us. We'll see you tomorrow.